Okay, cool. Let's get started. We definitely have a few things to cover. And, as I say, for those who have watched the YouTube video, there's a lot of economic impact on the Trump's Liberation Day tariffs. Basically the Liberation Day tariffs was, the Liberty Day that America's going to be rich again. That's the word of Trump. Okay, that's not me saying it. It's Trump saying it. So today, I think this morning in Australia we had the actual thing saying the Liberation Day. Trump's basically noting down who's going to be tariffed or not. So just we're going to understand a little bit more about the Liberation Day tariffs. Some people don't even know what it is, and some people are a bit lost on that. So I guess that would be a good start to break it down piece by piece exactly what these tariffs entail and what they are. They were introduced, how they're likely to impact the sectors, different sectors into the economy, of course, including commodities, manufacturing, global trade dynamics. So a lot of things. Also, we're going to examine how different economies might respond, and what's what does that mean for investors and everyday consumers like me and you, or parents, everyone. And then finally, of course, I'm going to conclude with the strategy for, how can we basically navigate that changes more effectively and more less drawn down, let's say. So we have a lot to cover. So, if you guys have any questions, please make sure to just put your hands up or even send a message on the chat. For those who are new here, see some new names. So that's pretty good. Every day has someone new. That's awesome. Welcome. It's a very friendly area. If don't be shy. Ask your questions. That's how we grow, and there's definitely space for everyone here. Okay. Before we go any further, as always, I have to put up the risk disclaimer. So okay, cool. Let me take this out. We do have a few things to cover today. First thing. First, let's go to here. Today's going to be a little bit different, okay? So it's going to be more like me speaking and you guys taking notes. But first, let's try to fully understand the Liberation Day. So first, on April 2nd, so today, yesterday on USA, Uncle Donnie Trump, as some like to call, or just Donald Trump, it was a very, very awaited event. He introduced a sweeping set of tariffs that he claims are designed to restore economic independence to the United States. The core component of this policy is a 10% baseline tariff on all imports, which goes into effect on April 5, okay, so 5 of April. And anything that gets into the USA will be a 10% tariff if not produced on USA. So let's say we have someone sending products over China. Anything, right? Literally anything, sending products over from there. Oh, yeah, sorry. Oh, gosh. So some of the trades from yesterday nearly got hit, take profit here. NZD-USD, we got executed. And then CAD JPY, oh, wow. Wait a minute. Let me come back. We got executed there as well. So all of the trades in profit from yesterday. Okay, so from yesterday, all of the trades are in profit. Looking good. Okay, so just leave it here. So basically, we have USA here. And then we have whatever countries here, okay? Let's say South Africa. Okay. South Africa sent something to US. Well, that's a 10% right there. Minimum 10%. Okay. It will depend because we do have some, I'm going to show that later into after some of the explanation, but we do have a set of tariffs from each different country. But baseline is 10%. So 10% baseline tariffs on any imports, which goes to USA, and that will be in effect on the 5th of April. Specific countries, as I say, they are facing much steeper duties. So let's say China, USA hit China with a 34% tariff. The European Union sees a 20% increase. Japan faces a 24% tariff. Vietnam and Cambodia, they are the subject to a staggering 49% duty. Okay, so the message behind these tariffs is very clear. The US is trying to protect domestic industry and reduce dependency on the foreign goods. But at what cost? Because we know this is going to have huge effect into the economy, right? Because it's like a double-edged sword. If we look back, that already happened. But before we go further, that's the image I want to show everyone. If you go into, oh wow, why is that not working? Okay, it's not working. That doesn't matter. If you go to ACY website and you come into learn and then market analysis, Lucas Santos, and then that's not the one. No, I think they haven't posted yet. Yeah, they haven't posted yet, but that's okay. I can just show you guys here. I was gonna show everyone. So we can clearly see here all the tariffs from Trump, okay? So we can see that we have some tariffs on China. We have tariffs on Europe. We have Norway, Costa Rica, Jordan, Dominica, New Zealand, Argentina, Ecuador, Guatemala, Honduras, everyone. It wasn't only on Canada and Mexico. Now that's the thing. Where is Canada and where is Mexico here? Find it. Try to find it. It's not. Ta-da! Surprise! Well, that's how Trump works, huh? There's no tariff on Canada and Mexico. And that's exactly why the Canadian dollar is so strong and the Australian dollar is weak, as well as the Mexico pesos is a little bit strong. So wake up, guys. There's something happening here. Anyways, so if we look to USA discounted reciprocal tariffs, is there traffic in money transactions? I'm going to send 15,000 USD today. Sorry, didn't got Suleiman. Can you just explain that a little bit better for me? Anyways, so here we see all the tariffs, right? Everything. If we look, it's basically half. Trump is basically imposing half of the tariffs. Okay, so if you look, let's say whatever Argentina, it's 10%. That's a baseline. If you look Brazil, it's the same thing, 10%. It's the baseline. But if you go for China, China is nearly charging 67%. So he's charging 67%. So if we get 67 divided by 2, it's 33. So 33 and a half. So basically Trump is charging everyone here at least half of what they're charging. If not, if it's 10%, then it's 10%. Okay? So that is pretty cool. But look at Serbia, man. Serbia is charging 74%. Wow. Look at Laos, 95%. That's insane. That's insane. Okay, that's a lot of money in there. But anyways, as I was saying, Trump is basically trying to make America rich again, as he said. Okay, that's his words. But now, historically, the tariffs, they are a double-edged sword, as I've mentioned. And while they can help shield domestic business from the foreign competition, they can also tend to raise prices for consumers and most likely will provoke retaliatory measures from affected countries. The real question here is whether these tariffs will bring economic strength or they will trigger another trade war. In my opinion, they are more likely to trigger a trade war than bring strength to the economy. Okay? That's my opinion. Some people may have a different opinion. Some people think that, wow, that's really good. I don't believe it is. Because with that, if we look to tariffs charged to the USA on this blue area here, we can clearly see that there's like Vietnam charging 90%. They can't go, well, they could, but that would be a little bit unfair to go above 100%. Okay, so my opinion here is, well, they can't charge more than 100%. If they charge more than 100%, they've been really, really cheeky. With that being said, that won't bring any sort of strength to the country. I most likely see the USA being on a trade war than anything else. Okay. That will there's a plus here, that will bring more inflation. Okay. Look at the US dollar. The US dollar is losing so much value, so much value in the last 3 or 4 hours. Well, more now, like 10 hours. US dollar has lost barely, like at least 1%. Okay, and that's a big thing for the USD. Now look at euro. Euro is getting much stronger. So people don't like USA anymore. People are basically buying gold, buying euro, getting all their money out from USA. Yes, it's paying higher yields, good, but like it's too risky. We don't know what's going to happen if someone wants to face them with trade war. They will, and that's going to be insane. Okay, so I'm not a long on US dollar. Definitely not a long on US dollar. Okay. Anyways, so the market reaction, that's exactly what I was talking about, the US dollar. So let's have a look at the market reaction now. Let me get it here. There we go. Let me show first the US dollar index. Okay, let me get US dollar index. Yeah, look at that. Okay, so really not looking great. Really not looking great for the US dollar. And that's a 4-hour chart. And look at the gap. Okay, look at the move. That's when Trump started to speak. So from here to now, as I say, it's 1%. Okay, it's 90.90%. Look at Nike. Look at Nike stocks. Whoops, sorry, wrong one. Nike stocks. We can go for this one. Perfect. Look at Nike stocks, man. That's a 1 hour. Let's go for the 5 minute. Okay, that's huge. 435,000 employees Nike has. That's 10%, man. 12% of the worst. Look at Apple. Look at that. From the top to the bottom, 5 right here, 11, 12%. Walmart, that's all companies that used to get things from outside of US to sell to customers. And look at that. So now what will happen is Nike has majority of the employees into Vietnam, okay, because it's a cheap labor. Now look at what happened with Vietnam, 46% tariff, okay? that shoes will cost 46% more. If the shoes was costing $100, now it's going to cost 146 because Nike will have to pay 46% to the USA because that was from from made outside of US. You guys get that? So that's really, really bad. I mean, the company Nike has 450,000 employees, most likely. I think it's around those numbers, and they're around 130 countries factors in Vietnam. Okay, they have 130 factors in Vietnam, and that's a 46% rate tariff rate. Good luck. Good luck, my friend. Okay, that's all I have to say. If you think that this is going to be good for the country, well, definitely will bring money. Definitely, not arguing that. Of course, we'll bring money. 46% more. All lovely. Will that be good for the consumers? Definitely not. Will that generate more inflation? Definitely yes. Would the inflation then be more stickier? Yeah, 100% yes, man. Will the Fed, most likely possible hike? Maybe. So there's a lot of things. Investors are particularly concerned about those types of effects. Will these tariffs disrupt the supply chain? Will the cost of doing business rise across multiple industries? Will consumers start feeling the pinch with higher prices on everyday goods? The consensus among financial markets are very, very, a lot of uncertainty. There's a lot of uncertainty, which, markets traditionally dislike. And uncertainty leads to a lot of volatility, and volatility leads to market downturns. So what are going to be the economic implications on the tariffs? Of the tariffs? Well, there's a lot of things, like a lot of different levels that will be affected. At the most immediate level, I guess the business that rely on important goods, they will see costs rise. As I just say, Walmart, Apple, Nike, Adidas, everyone that has anything to do outside of US, and then they bring the goods inside of the US, they will not like that. Okay, that would be really bad. But of course, American manufacturers who source, raw materials from different countries, they will need to either absorb those costs and pass them to the consumers in form of the higher prices, or they will have to take it on the chest. That I don't think they will. And remember what the RBA said this month. The RBA say this month that the business are saying they're saying that it's becoming harder and harder to pass the cost to the consumer. So the cup of coffee example that I gave on Tuesday or Monday, I think it was Tuesday and Monday, actually, both of days. The cup of coffee used to cost $4. Now it's cost $5.10. Okay, so they are passing on the costs. They're not dumb. They have to, and I don't blame them. Okay, I'm not saying that they're doing wrong business. No, they're not. And for the consumers, that basically means that the goods will range from sorry, someone sent a message on the chat. I'm going to send money to American. Is there additional tariffs in money transfer? From Nigeria, I don't think so. At least 10%, right? But that's a different that's a different thing. You would have to check with the provider that you're gonna be sending this money. It's different stuff. For consumers, that basically means that goods will be, from electronic to automobiles or clothing, they could see prices increasing. And I forgot to mention as well that Trump announced 25% tariffs on any automobile parts. Wow. Not good, huh? Not good, my friend. Interesting. Now, the 25% tariff on foreign-made automobiles for example, as I mentioned, that will add thousands and thousands and thousands and thousands of dollars to the price of the car. And similarly, everyday items that rely on foreign components, smartphones, household appliances, furniture, they will most likely see some price hike. And the risk of that is it's a major concern. When the US imposes tariffs, other countries, they tend to respond in the same way. The European Union and China, they have already signaled that they are considering countermeasures. If they introduce their own tariffs on American goods, US exporters, particularly those in agriculture and manufacturing, they will suffer a lot because China and Europe, they have a lot of agricultural thing. Okay. Now, one of the most immediate effects of the tariffs that I've seen on the market today was on gold. Okay. Yes, gold came down. Okay. But I'm talking about, let me go to the 1 hour. I'm talking about this up move here. Let's call it a 2% move. Okay. As I say, one of the most immediate effects that I saw today in the market was on the commodity prices. And as tariffs increase, the cost of imported raw materials business that rely on those materials, such as steel, aluminium, what else? Any product that relates to agricultural as well, they will see a lot of price volatility. For instance, like farmers who export products like soybeans and wheat, they could face a lot of reduced demand if the foreign markets impose retaliatory tariffs. And similarly, the cost of metal used in construction and manufacturing is a lot. It's very, very likely to rise as well, and that will affect industry across the board, across the USA. If we look to the oil prices, let me go oil. I had oil prices here, but okay, it's working. Yeah, so if we look at the oil prices, we did had a jump down of probably like around 4% if we count the top to the bottom. They will be, they will see a lot of impact if geopolitical tensions escalate due to the trade conflicts. Investors and, commodity traders, I think now we have to be watching these markets because any disruption could create both risks and opportunity in the market, but in the months ahead, but definitely paying attention into the headlines. That would be the most effective way to be trading gold and oil prices at the moment. Okay, that's what I think. Now, let's I've tried to bring the industry-specific case study here today. So let's take a closer look at 3 industries that will be very significantly impacted by those tariffs. The first one is the automotive industry, okay? Anything that has to do with cars. So we all know that, as I say, Trump imposing a 25% tariffs on foreign-made cars, and that is expected to drastically increase the price of imported vehicles. And that will make them less competitive in the US market. Domestic automakers might benefit in the short term, but if the production costs rise due to higher tariffs on important components, the price will go up across the board in all the cars, okay? So that doesn't make much sense in my opinion, because take this. If you want to buy a Porsche, right? And you live on USA, you want to buy a Porsche. The Porsche comes from Germany, or you want to buy a Volkswagen, whatever, comes from Germany. Okay, the Porsche costs you 100,000. Now it's going to cost you 125 to 130,000. If you want to buy a Ford Mustang, okay, Where is Ford from? Ford is from USA. The Mustang costs 50,000. How much did it cost with the tariffs? Maybe 55,000, just because sometimes Ford used some parts from foreign countries, and then for that, they have to they're going to be charging on any parts, any parts of the car. It can be like a window, it can be a button, anything that relates to car, 25% tariffs. In the first term, of course, someone would prefer to buy a Ford than a whatever Volkswagen, Porsche, BMW. But in the longer term, that will definitely, the market itself, the price itself will push the Ford prices higher. And then the competitive is gone because Ford now costs the same thing. So your money value less and your car is still the same. Okay. And the Porsche will maybe be much more expensive. So that's just the thing. It doesn't make any sense. On the short term, yes. But if the production costs from the USA continues to grow because any parts is 25% tariffed, then this doesn't make any sense, in my opinion. If we go to the technological sector, companies like Apple, who else from US? I think it's just Apple. They rely on a global supply chain. So if the cost of production in China rises, for instance, that they will, these companies will either have to absorb the cost or they will raise the prices. Most likely they will raise the prices, which then could dampen the demand. If we look to a different perspective, a different eyes to agricultural, so American farmers, they could be among the hardest ones. Okay, so if China and the Europe impose tariffs on the US agricultural goods, the farmers will struggle to find alternative markets. Potentially, they will lead to financial losses and then a lot of reduced exports. So I don't see goods. I don't see any good part on that. Besides on the short term. Short term, most likely he's going to make a lot of money, but then in the longer run, no. I think tariffs can, they could slow not only US, but like the global economic growth. The US now has raised with that the average tariff rate to 22%. And that level has not been seen over a century. I'm not talking a decade, I'm talking a century, 100 years. If we look back, high tariffs, they have often preceded economic downturns because they disrupt the trade flow and they increase the cost for business and consumers as well. Emerging markets, in particular, they're very at risk, because they depend heavily on the trade with the US. So let's say Brazil, for instance. If global trade slows, economic activity, they could weaken across multiple regions. And that will lead to a lot of instability as well. Okay. So I reckon, just finalizing here, I reckon this is really not good. My opinion here is if we look to the market at the moment, euro dollar is trading at pretty much 1.10. And I've mentioned that. I really mentioned that a lot of times that it would come back to 1.10. I'm looking to maybe a little bit higher. Okay, let's go for the 4 hours. My box strategy never lies, man. Never lie. So somewhere around here. We may be looking at 1.11 now. OBV, it's an indicator that measures the flow from each candle. And we can see that it's breaking with a lot of volume, okay? A lot of volume. So I would definitely not looking to short on the top here, maybe waiting even a little bit higher at 1.12 maybe. Okay, 1.12 would be a good trade, euro dollar, because US dollar is very weak. Investors don't like that. What Trump just said. Europe has a very, very good card on their hands. They can just put back tariffs and then they will be much better than USA. Um, Gold, definitely longing it, just waiting for a better opportunity. A little bit of a pullback to continue to go higher. US dollar CAD, looking to short that US dollar CAD, okay? Especially after this really, really interesting one that the Canada is not into the list. What else? Yeah, that would be it. I think euro dollar, US dollar CAD, pound dollar as well, longing it would be a good scenario all the way above here. USD JPY shorting for sure. Okay. Wow, that's a really good trade. Shorting, that was my area for it to go, but it didn't, but that's okay. Now it's time to be trading Japanese yen back again, because now we have some sort of reliance on what we should be expecting and what we should be doing. Aussie dollar, definitely long. Aussie dollar, looking to long that market. Okay. But that's all of my trades. That's my opinion. I'm not telling you guys I'll take this trade or not. No, you have to do your own diligence. You have to go around, you have to search. I'm just presenting the facts. Okay, again, that's all my trades. New Zealand dollar, definitely long as well. I'm looking to long that just because Australia and New Zealand didn't get much of a tariff. We did get only 10%. So if you look here, New Zealand as 10%, and then Australia, where is Australia again? That was on this side. There we go, 10% as well in Australia. Okay, so Australia and New Zealand, so AUD, NZD, Canadian dollar, euro, pound, Japanese yen, they're very, very strong at the moment, okay? Looking to long those currencies against the US dollar. Gold as well, looking to long. Gold next target, 3,200 and then 3,400 until end of the year. Let's see if we get that. Guys, thank you so much. I hope everyone have a lovely weekend ahead. Don't forget, tomorrow we have NFB. I'm looking to just a normal, won't have much effect into the market. I think the market will be looking to trade the absorption of those orders into the tariff thing that just happened. But yeah, we'll be here back on Tuesday. So I see everyone back on Tuesday. Have all a great weekend. Take care, and I'll see you back next week. Cheers, guys. Have a good one. Bye-bye.